beautiful day here in Seoul. Hello and welcome to Business Daily. I'm Jung. Before we get started, let's first take a look at what you can expect from us in the latter half of our program. Things over in Greece are not looking too good as the country is running out of money and faces a tight deadline from European creditors. We take an in-depth look at how this is all affecting the Korean economy. Korea hopes to grow the country's cruise industry as more and more Chinese are expected to choose cruise ships over airplanes and other means of travel when coming to Korea. These stories and more coming right up. Starting next year, workers here in Korea will see an 8.1% increase in their minimum wage at 6,031 an hour, or roughly $5.30. Now, the new pay level was reached following heated marathon talks between representatives of management and labor unions. The deal was reached late Wednesday by the Minimum Wage Council after 15 of 27 vote-holding members cast their ballots in favor of the compromise. 9 labor union members walked out of the vote in opposition. The Employment and Labor Minister will finalize the minimum wage by August 5th. Foreign investors are retreating out of Korea's stock market, an uncertainty stoked by tanking Chinese bourses and Greece's debt crisis. According to Korea Exchange, foreign investors sold off their shares at rapid speed in the first 7 days of this month, net selling more than $590 million in that period. Foreigners held roughly 32.6% of Korea's market cap in the first week, down 3.3 percentage points on year, and the lowest monthly average in nearly 4 years. The number of Chinese tourists choosing to travel to Korea on cruise ships has shot up over the past couple of years. And with this, the Korean government is stepping up efforts to boost the country's fledgling cruise industry, which could potentially generate billions of dollars in economic output. Our Jung is on this story for us this morning.
This cruise ship, weighing more than 11 tons and stretching over 3 soccer fields long, sets sail from Shanghai in China and docks at Korea's Incheon City and Jeju Island. At full capacity, it can carry some 3,600 passengers.
At this rate, the number of Chinese who go on cruises will be over an annual 10 million.
This is why Korea is looking to develop its fledgling cruise industry. According to the country's Ministry of Oceans and Fisheries, more than 1 million Chinese arrived in Korea aboard cruise ships last year, with figures expected to rise to 3 million by 2020. Considering Chinese visitors spend an average $1,000 during such trips to Korea, the government estimates the country will see over $2.7 billion in economic effects in the next 5 years. More reasons for the country to break into the lucrative industry. By the end of this year, it plans on launching its first cruise ship.
It is very important to cooperate with the local government to co-develop food, shopping, and tourism programs to suit the tastes of Chinese tourists.
The ministry wants to help foster local cruise operators and install enough dockyards and other infrastructure to support the industry. The government says it will issue new business licenses to local cruise operators within the year and see them launch their pilot services by the end of this year or early 2016. Several local shipping companies and casino operators like Grand Korea Leisure have already expressed interest in entering the cruise business. Jung, Business Daily.
With Greece under some tight deadlines from European leaders, experts have been saying that the effects of the Greek debt crisis on the Korean economy will be minimal. However, we're now seeing Korean shares plummeting on worries that Greece could possibly exit from the euro. Let's take a closer look.
Korean shares continued to fall, led by heavy foreign sales on anxiety over the Greek debt crisis on Wednesday. This comes as investors have been dumping stocks on concerns over Greece and extreme volatility in Chinese markets. The country's bourse operator, Korea Exchange, held an emergency meeting to examine current market conditions. Greece now faces a crucial deadline of July 12th, which European leaders have set for Athens to either accept a rescue deal or leave the euro. Experts remain divided on whether this battle to contain Greece's debt will have an impact on the Korean economy. Some say the effects won't be as big, considering that Greece makes up only about 0.1% of Korea's total trade. But others are worried exports to the Eurozone will be hit if Greece's debt problem spreads to the whole of Europe, leading to the depreciation of the euro against the won.
And to tell us more about this, we're now joined by Professor Yang Jun-seok from the Catholic University of Korea. Welcome to the program.
Happy to be here.
All right, so before we get started, can you update us on the latest on this Greek debt situation?
Okay, well, the EU leaders and the finance ministers met on the 7th, and they expected Greece to submit some kind of a plan, even if it's in rough form, but they didn't. They sent one-page letters saying that they will send a plan by the 9th. And then based on the plan sent on the 9th, they will have a meeting on the 12th, and then they'll discuss whether that plan will be acceptable or not, and that will probably be the big decision on whether they will give Greece additional aid or not. Now, the letter that they got on the 7th had 4 interesting points. First is that they would honor all debt and obligations. So that seems to imply that they will pay everybody back eventually. Second, they emphasized fiscal and pension reforms. So that was what EU was looking for. But third, they mentioned sustainability of the debt and government operations. So that some people are reading into that they might seek some debt forgiveness. And then lastly, and this is the biggest, they seek 3-year loan facility. That means they want to have a fund where they can borrow for 3 years. So until we see what the Greeks have in mind, we won't be able to say how the other European countries will react.
All right, with all that behind us, what kind of impact have you seen so far with this Greek debt crisis have on the Korean economy and I guess the global economy as a whole?
Okay, well, the U.S. seemed to have a rough day on Monday and they seem to have recovered on Tuesday, but then they had a computer problem on Wednesday, so we're not quite sure how that goes. The EU generally had a bad week so far, but it's not as bad as what a lot of people feared, so that's a little bit of good news there. The Asian markets seem to be as hard or even more hard hit than the European markets, but that also seems to be because China is having so many problems on their own. So it's been a very bad week for Asia in particular, but we're not quite sure how much to attribute that to Greece.
All right. Well, like we predicted last week when you're here, foreign investors are already pulling out of Korean stock markets. And some of this is coming from, of course, what you just said, concerns from China. But are investors seeing Korea now as a risky market than safe haven?
I think we can't tell for sure. I think they've been spooked not only by Greece, but also China. And a lot of these very short-term portfolio investments, well, from the foreign investors' point of view, it really doesn't cost them much to, say, put their money out of Korean won and into US dollar or dollar investment for a while to see how things develop. So really, we'll have to see after the 12th whether the foreign investors take additional money out or put money back in.
All right. Well, then do you think Korean shares will continue to fall until the 12th and past?
Yeah, until the 12th, I would not expect a good week. After the 12th, it entirely depends on what the Greek plans are, how the EU will react, and how China market will react.
All right. Well, then, as of now, is it safe for us to say that economic impact of the debt crisis on the Korean economy is contained aside from the Korean shares falling?
Yeah, usually when we have problems like this, the first place we see it is in capital movements. And because Greece is so little part of Korea's real economy, and also real economy, the shocks tend to take a lot longer. We'll see only the movements on the capital markets for a while.
All right. Well, experts still remain divided on whether or not this Greek debt situation will have an impact on the Korean economy or not. But this battle to contain Greece's debt really started back in 2010. And depending on looking at the past events, can we make a prediction on how all this might impact the Korean economy in the future?
Okay, well, it's not only Greece's fault, but general slowdown in the Eurozone economy has not only slowed down the global economy, economy, but also Korean exports. So that is expected to continue no matter what happens, whether Greece goes into Grexit or not. But also, there will be a lot of volatility in the capital markets, which is what we're actually more afraid of. These type of financial crises tend to affect Korea more through financial crisis or capital movements more than anything else. And then, sort of a good point, if you can say things in a financial crisis, has been that in 2008 as well as 2010, when Greece had their problems, there has been flight to safety, flight to U.S. securities or advanced country investments other than those of the EU. So what happened was after 2008, after 2010, the yen went up, the yen appreciated. And that has helped Korean exports. We'll have to see how the international investors not only act in the Korean market, but also the Japanese market.
All right. And like you mentioned, this coming Sunday, a full EU summit is set to take place, and that's where they're going to decide whether or not Greece is going to stay in the Eurozone. Depending on the outcome of Sunday's meeting, what can we expect from that?
Okay, well, what I would really look for is, well, I think there's going to be a battle between the technocrats and the politicians. Technocrats, I think, will do whatever they can to keep Greece in the Eurozone. But in order to do that, they really need the support of some key countries, the most important of which is Germany. And from all newspaper reports, all the people who are living in Germany, they really don't want to give Greece too much of a free hand. So it'll have to be Angela Merkel and other EU leaders will have to see whether they take the advice of the technocrats or they go with the public opinion. If they go with public opinion, it'll probably end up in Grexit.
All right. And how would that impact the Korean economy?
Okay, well, there will be extreme confusion in the financial markets for a few weeks to a month or two. And then I think Korea will not be affected too much in terms of the real economy, at least if you just think of what happens in Europe. But for about a few weeks to a couple of months, I think some chaos in the financial market is unavoidable because this is a situation that's never happened before.
All right. Thank you so much for your insight today, Professor.
Thank you.
And again, we'll keep you posted in the days and weeks to come on what happens over in Greece and what impact it might have on the Korean economy. All right, that wraps it up for today, but we'll be back tomorrow with more business news that matters to you. Thanks for watching, and bye-bye for now.